weekend all. Ira Epstein with your weekend edition of your financial market wrap-up, and this is for Friday the 23rd of August, 2019. We're after 4 p.m., so the settlement prices are up, and what a wild day. You know, we were warning all week long that you have the FOMC, not the FOMC, you have the Fed chair speaking at the Kansas City Symposium, which is called Jackson Hole, and it began on Thursday, wrapped up today. And it brought with it the fireworks. And the fireworks came after, actually came during the symposium this morning, as first China released, as Mr. Powell had released his speech and was starting to give his talk. And by the way, cameras aren't allowed into the symposium to see how he delivers the speech and all that. But China released its next round of tariffs against the U.S., and it's got two that are coming on, I think a 5% and a 10% tariff. The first one takes place on September 1st. Gee, that's when our tariffs go into place. The second one, December 15th. Gee, that's when ours go in. And they're taxing, or putting a tariff on, it's a tax, just over 5,000 goods. So the president, all he had to do is see that. I don't know if he understood in the speech that Mr. Powell was giving, it's not a policy speech, this symposium for other central bankers, but he tweeted out that Chairman Powell was the enemy along with Chinese President Xi. Remember, that was his best friend. He respected him. Now they're the enemy. Okay, if you think that's going to make a trade deal, God help you. Great. The stock market didn't. You were down 700 points. In the final minutes, the algo traders were covering shorts and so on. The gold up $29 today. Silver exploded. And as you'd expect, certain of the other industrial metals down. You had your bid into the bonds and notes. And again, you were watching the 2-10-year invert during the day. They didn't stay that way, but you keep flirting there. The one the Fed watches is the 3-month 10-year. There was an interesting conversation with Vice Chair Clarida today by Steve Leisman on CNBC, and Steve was, of course, trying to pull out, what did you think of the president and the tweets? And he was mentioning, I think we're at August 23rd, and 22 days this month alone out of the 23, the president has had negative tweets about the Fed. The vice chair did not fall into that trap. They're data dependent, that's where they're staying. Price stability and employment is their agenda. It's that simple. But I think there's more to it in any case. Energy prices down as the world is fearful of what was admitted, the headwinds of world trade. And today was a day where it just showed how far apart the U.S. and China are. As much as you see the president's minions come out, and they will come on like Larry Kudlow, who I certainly respect, but they'll come out, well, I think the talks have some substance to them and they're going fine. They're not going fine. And they're not going to say they're not going fine. All they're going to do is, this thing is a full-fledged trade war that isn't going away. And by the time you see this, the president may have done something else, because he said he was going to do something later today. Haven't seen that as I'm in the studio recording. It wouldn't surprise me if he just said there's no point in a September meeting. That would be making sense. And that, I'm talking between China and the U.S. All right, as we look at the S&P, you're pulling back. You're down for the month, and that's what I look at on the monthly chart, 4%. You're not far from the all-time highs. You would think it's a lot worse, because if you're like we are in an office, looking at the screens, hearing the financial TVs, many of them going on, it feels a lot worse than it is. The pattern is still one of higher lows, higher highs on a closing basis on a monthly. And you'd have to go back for support at 27, what is that, 85. And that's quite a ways from where you're at right now, about, 70, 80 points from here to get down to that support. The next chart that we use on this weekend edition is all week. So we have one monthly chart, then the rest are weekly. Here you can see you're in the corrective mode. And here for the week you can see, you wouldn't believe it, but you're only down 1.24% for the week. I would feel like you were down 10%, wouldn't you? Worn out. But you can see the bias is to the downside. When we come and look at just a weekly bar chart with nothing on it, this one, if you'll remember, was closes only. The monthly chart was closes only as well. Now we're looking at the bar charts. And what we had this week is an inside week. When I take a look at what that still has on the pattern, you still have a higher low and a higher high pattern. To break that and turn this pattern down, and the word is down, you'd have to get under 27.75.75, this break low right here. As long as you didn't take out 29.44.50. Right, that would be the number. You got to be one tick over the high you see here of 29.44 1/4. As long as that didn't happen and you broke through, you'd be in a downtrend. Where's the moving averages? Over the market. So the resistance is above the market. You've hit it now 4 weeks in a row. Market's coming down. First support on moving averages, if you stay down, is 27.59 and a fraction. If you look at Bollinger Bands, the support comes in between that 27.59 to 27.84. And remember what a Bollinger Band is. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. I often look to see, is the band narrow or wide? This band is what I'd call fairly wide. I would not be surprised if you hit it, you found some support. That's the point that I'm making. Resistance in the market, 29.17, the 18-week average, and momentum down. So, defining the trend, interesting. The swing line is up, which is negated because the market's under the 18-week average. The two negate each other out, and momentum is down. When you come to the NASDAQ, bit different. Downtrend. Lower highs, lower lows. Now, it makes sense when you think about it. The president's already telling American companies, get out today of China, don't do business there. He can't order them to do it. But microchip companies, they're the ones that could be impacted here. But I'm not a fundamental trader, I'm a chartist. So what I don't want to see taken out is last week's high of 77.8950. As long as that's not taken out, I have a pattern of lower highs, certainly lower lows. Unlike the S&P, you settled under the 18-week average, so the bias is down and momentum is clearly pointing down. The bears probably want to defend their position right up there at that 18-week average. In the Dow, it's more similar to the S&P. You have the higher lows, the higher high, see it? But you settled under the 18-week average. Therefore, the bias is down, which negates what the swing line is doing and momentum pointing down. The Russell is more like the NASDAQ. You've got lower highs, lower lows, bearish. You're under the 18-week average, bearish. Now what you've done is you've come back to visit this lower Bollinger Band and you're just sitting on it. So this market could be ready to push it out of sideways action. That could be a bearish scenario for this market. You would have thought, as a fundamentalist, that small cap companies, which this index is, would have done better than the multinationals that have exposure abroad. This is the most bearish looking of all the charts. In the VIX, all the market did on the weekly chart is come back to support on this correction to a combination of the 100-week and the 18-week average. The trend is still up, higher lows, higher highs. It got over the Bollinger Band, thrown back, ran back up today, this week, challenged it, settled just under it at 1987. But the trend is up, bias up, everything's pointing higher. In the 30-year note, let's go to the 10-year, I guess this is the 10. Again, I need my glasses, I think. Higher lows, higher highs. What you did is you got up to, on the surge that you can see, the upper Bollinger Band, you pulled back and you've stalled. That doesn't mean anything. It's a stall. You're still very much in an uptrend. You have higher lows, higher highs, resistance 131.15, the upper band, and momentum still locked in friendly. TLT. The market did its darn best this week to try to settle back under the upper Bollinger Band. Couldn't do it. It stayed over it that week as well in here. So you've got 3 weeks in a row of being over that band. It wouldn't surprise me at 145.95, just over that the market tries to get back within that band this coming week. But the trend, what is it? I don't have one. Got a lower low and a higher high. That's not a trend. I know the bias is up. I'm a bit extended to the upside, and momentum's up. In the dollar index is sideways. I realize we keep hearing it makes new highs. It makes new highs by doing this, scratching its way up. It's not surging to the upside. That's first. The trend has been up, higher lows, higher highs. It's had one time that it hit the upper Bollinger Band recently. Remember, this is a weekly chart. It pulled back to that, tried to challenge this week of the upper band, and ended up settling lower. Now, what could happen on this chart, and I'm not saying it's going to happen, is if this market takes out this 90, right here, this week's low, of 96.98, and not take out this high, you'd end up with lower highs, lower lows, close under that 18-week average, and suddenly you're in a downtrend. Be interesting to see if momentum would turn down with it. So what do the bulls have to do? They don't want that to occur. So their number is going to be the 18-week average to try to defend. In the euro currency, you got a nice bounce this week off the lower band. Resistance is going to be the 18-week average. In order to turn the trend up, you'd have to get over this high right here, which is 112.85. Ideally close at that number or higher over the 18-week average, you'd have an uptrend developing. At this point, momentum is flattened out, the bias is down, the trend is down, and you've hit downside targets. In the Mexican peso, you have a higher high, lower low pattern. What the market did is today it finished 50.08. 50.08 is still under the lower Bollinger Band. This week, though, it was up and over it, as you can see. So we're riding the band. This market is frustrated that there's no deal, and trade is a big issue. You know that. That's what you're hearing now all over. In fact, the Fed said it today. Their biggest headwind is international trade, and they do watch it. But I don't see a trend. I see bias to the downside. Canadian dollar, you finished out at 75.25 under the 18-week average. You've got lower highs, lower lows, bias down, momentum down. As long as the market doesn't take out this high of 75.89 and a half, the bears are controlling the market at this point. Japanese yen, well, this is a market that's void of a trend right now, but you can certainly see the fear index at work. You came down on a correction, hit the 18-week average, found support, rallied back up to the upper Bollinger Band, the resistance zone, backed off from it, and now the question is, does it make another run at it on fear? Momentum up, bias up, but as I said, not trending. Guess what happens? Take out this week's high and you're in an uptrend into that upper Bollinger Band. In Bitcoin, you're still in an uptrend. Now you have divergence here. You have momentum pointing down, the bias up, higher lows, higher highs. That gets negated if you take out the 9,500 level, and support would come in potentially at the 18-week average at 92.10. In WTI versus the Brent, so it's Brent WTI spread, you got under the $4 level, you're back up to the $5 level. As you take a look, you're in a downtrend on the Brent. You have lower highs, lower lows. You had hit 2 weeks ago the lower Bollinger Band. You've had a bounce from it. Momentum has flattened out, but you're still in a downtrend. To negate the downtrend, you'd have to take out last week's high of 61.50. Barring that, if the market decides to move down again, 56.20 comes into play as a potential target on the lower Bollinger Band. In the WTI crude, you're in a downtrend. Lower highs, lower lows, resistance, the 18-week average. Clear this number, 57.47, which you didn't do this week, and you could end up with higher lows, higher highs over that number, which could be friendly. So the bear's job is going to be to defend that at the 57.28 level. In terms of stochastic momentum, it went flat on you. So the trend is down, the bias down, momentum's gone flat. Rebob gasoline, well, I think with the end of summer, you're looking at a market on the bigger picture that is bearish. Lower highs, lower lows. You're liable to get a bearish crossover here where the 18-week average now gets under the 100-week, and that could add fuel to the fire, putting the market potentially down to 158.58. Momentum down, bias down, everything bearish on this chart. Heating oil, same thing. Lower highs, lower lows. Resistance, the 18-week average. But to get there, you'd negate the downtrend because last week's high was 188.39. That could give you then higher lows, higher highs, but you'd have to close over 192 at this point at least in order to turn the trend to the upside in terms of bias, because you'd be over that number. The bears have a bigger job to defend right here, but the trend is still down. You put it all together, and wow, what a week. And I start you off each morning, and this morning I started everybody off with it. I start recording between 5:30 and 6 a.m. a video for my subscribers. You're watching this not as a subscriber. This is a freebie, be it on YouTube, websites all over the country. But the idea in the morning is to give you confidence as to what I'm seeing, and maybe that's what you're seeing, so the two mesh. Maybe I'm going to talk you into an idea. Maybe I'm going to talk you out of an idea. I'm going to cover 40 charts on futures and typically 5 on the ETF markets. The 5 I select on the ETFs are because they go hand in hand with the futures. Now, the difference of those videos is, number one, I'm going to give you at that early hour what the fundamentals look like in Asia and Europe, if there's something there we should be looking at. Then I'm able to give you technical analysis, and unlike here, I'm going to say, I want you to go long here. I want you to go short. Do this, do that. The idea is, and I'll stick my neck out there, this is what I think the trades are at this point in time. And I do this each morning. And the idea is, you see what I'm doing, maybe you want to do that. The charts are going to look different than the ones that you just saw. They're going to have a black background and more studies on them. And I explain the studies in detail to you. I also review in this sequence all the time. Let's assume you're an energy trader. Maybe you don't want to look at all this. Well, you just grab this slide bar, you move it, it'll light up and it tells you what section you're in. In addition, you can also click on a lexicon here. You go right to the energies. I had a gentleman today that took the subscription. He goes, I don't have time for this. What don't you have time for? Just slide to the area you want. That's the difference that I'm getting at. Learn how to use it, and it's time saver, not time user. Now, as I said, it's a subscriber video. That's the hint word that I'm charging for it. And no, it's not outrageous. For 30 days, $7.95. It comes in any time that you begin. That's 26.5 cents a day for the 30. You can quit, stay with it. If you stay with it, it's automatic. Then it goes to $15 every 30 days. But you can change that. You can stop, or you can go to a 1 year. And if you go to a 1 year, instead of $15 every 30 days, it turns out to be $13 per 30 days. Now, if you think about it, it's not very much money in order to get 22 days worth of videos typically, and even when I'm on vacation, I often put these out. I did it when I was on vacation this month, so my people had their videos. How do you get to it? Well, you can go to our website, and under the keywords research or education, you can click up here. It'll take you right there. If you're watching me on YouTube, you can call my staff. They'll work with you on it. So it's pretty simple to get around it. It keeps these videos, if you like them, going, because these aren't free for me. I've got a whole studio I've got to support here, so I do appreciate it when you subscribe. I'm Ira Epstein. You have a good day, and I will talk to you all Monday.